Hello and welcome to Asset TV's View from the Floor, live from the New York Stock Exchange. I'm pleased to say that I am joined by Peter Tuchman today. He's a senior floor trader at TradeMas and also known as the Einstein of Wall Street. So welcome, Peter.
Thank you, it's a pleasure to be with you.
Well, let's start off with taking a broad look at the markets. I mean, we're having an S&P 500 rallying some 15% or so year to date, trading around record highs, markets expecting 1 to 2 rate cuts potentially this year. I mean, what is your take here? Do you think this market can continue to power higher? Or do you think that, that you're in the camp that perhaps we're going to get some kind of a pullback?
You know what, look, it's hard to... Markets are funny, right? And it's funny how the media tends to catastrophize the situation. We've had we had the first quarter, best quarter since 2019. April was a bit of a hard month because of the lack of transparency around the Fed and how many interest rate cuts we were going to have. Then we had May, the old premise of sell in May and go away. That did not come to fruition because we've had somewhat better economic numbers coming out. Obviously, all eyes the story is how many interest rates are we going to have? You mentioned 2. I think you're being generous. I think there may be only 1. There's a 58% chance that we may get 1 in September. It is a data-driven decision. Obviously, the Federal Reserve is watching every bit of information that comes out, CPI, PPI, all that kind of stuff, and the labor market. That keeps changing. The market every day, with all this potential headwinds, the market keeps trading at these record highs day after day, week after week. So I'm a firm believer the market tells us what it thinks of the information. However, over the last couple of days, we have seen a little bit of a pullback. You know, it's funny how NVIDIA, which was the flavor of the moment, the stock that went from 108 in February of 2023 to a post-split of $1,200, and now even after the split has rallied 11% since the split, which is, is spectacular. We did have a pullback finally, 1 or 2 days, and suddenly the world's coming to an end. The rally is over, and that's not how it works. Healthy pullbacks in stocks that have had over 1,000% rally is healthy. A market that's had double-digit growth in the first half, it's healthy to have a pullback. There's no crisis going on. Obviously, it's healthy when markets pull back and then they forge higher. Is the market going to go up or down? The answer is yes. That's a surety, right? We're going to see a bit of a roller coaster here. Right. I believe we're at a crossroads, right? We're over the next couple of coming at this week, Friday will be the Russell rebalance. Last week we saw the S&P rebalance. Even though through all of that, there's a lot of rotation, consolidation. People, the big guys are sort of organizing their plan for the second half of the year.
I'm going to pick up from there. I mean, we've seen tech very much in the driver's seat as well. You mentioned NVIDIA. You said that you think it's more of a healthy retracement rather than a sign of fragility. Yeah. But at the same time, we do see market breadth being rather low. I mean, what do you think in terms of participation? Is it tech going to continue to be in the driving seat, or are we going to get more participants in the rally?
Okay, so we've seen that 52% of the companies are trading at 52-week highs. I don't think that's a bad breadth. I know that people's fear is that this rally is being supported by 7 stocks, by 1 stock, by NVIDIA, and by this tech sector. I think the small cap and the mid cap has given us, if you really analyze it, the breadth is a little wider than just tech, right? And so I think that that's going to support the growth going further. I don't think we have a bubble, and I think any pullback that we have at this point, while the information is still coming in, there are unknowns coming into us over the next couple of weeks. Look, we've got the second half of the year starts next week, right? We have an election year. We still have the question, how many interest rate cuts are they going to have? I think we still don't have all the information necessary to make the decision whether we are going to pull back up against some technical resistance, or is this pullback us forging a better foundation to go higher.
So you think we still need some more clarity from the Fed then in terms of economic policy?
Yes, I believe so.
Okay, and in terms of, you mentioned election year, I mean, how do you think that's going to impact the market?
historically, elections have absolutely no effect on it. I think this is obviously a unique election. Obviously, you've got two characters, some with policy, some with a lot of wild card fanfare, right? So I don't think it's going to have a big impact, but I'm not really clear on that. We don't, it is a very unique situation. We've never had a situation where there's such a dichotomy, diversity. I don't even know the word to describe what's going on in Washington. But historically, it's important to note that elections have very little weight on the market.
And of course, we're mid-year now, so what are your expectations for the second half of the year?
Okay. So, look, as I said, I don't know what the second half of the year is going to bring us right now. The market seems to be telling me that any small pullback that we've seen, it's very rare that you have this long a period of time without at least a 1 to 5% pullback. And we've not seen any pullback at all. Any little bit of a consolidation that we've seen over the last couple of months, like April, for instance, we were down 10% in April after a really robust first quarter. The buyers, I'm a trader. I'm here I trade on the floor of the exchange. So I see the flow and I see the volume and I see the volatility, I see the liquidity. And every little sell-off that we've seen, we have a bid in the marketplace. What does that mean? There are buyers in the wings, and the buyers are not really waiting. They'd love to see a 10% pullback because they're dying to scoop up some stocks at a discount. It's just not happening.
And in terms of the next catalyst for stocks to power them higher, what do you think that could be? Is it earnings, data, rates?
Yeah. All of the above. That is a great question, and I don't know the answer to that question. Clearly, what happens with the Fed over the next couple of weeks will be a telling factor. I think, obviously, earnings coming into the second half of the year, for sure. I think that the bigger players, the players that are going to determine what's the next direction or catalyst of this market, have not shown their cards yet, right? And I think they're waiting for a little more clarity around the Fed. Earnings is not that. The earnings are going to be what they're going to be, and I hate that expression, but that's a fact. That's already sort of priced into the market. But I think a lot of the economic news, we've seen the first half of the year, there was a lot of skepticism around the economic data that came in. PPI, CPI, labor numbers were disappointing. They were good for a potential cut, but they were not good for the market per se. And now we're getting a few numbers that are coming in that are a little bit better. The last CPI, PPI number were better, and the market has responded fine to it. So look, we're seeing a pullback here of 10 small handles on the S&P, maybe a couple of 100 points on the Dow. So we're in transition, and we're at the crossroads.
At the crossroads, indeed. So we'll leave it there. Thank you so much, Peter.
My pleasure. So good to have you here on the floor.
That was Peter Tuchman of TradeMas.